Welcome back to Hot Stocks. Today we compare and discuss two of South Africa's largest unsecured lenders, namely Capitec and African Bank, and we're now discussing their funding businesses. But Paul, you are wrong on the disclosure front. Jean-Pierre, state your case. You are no longer short able, are you?
Correct. So normally the hedge funds don't like to talk about shorts because CEOs sometimes take it personally and they think you are shorting them as a person, which we are not. So Leon Kirkenes, it's nothing personal, but
please don't take it out on JP and 361.
Yes, please don't bar me from the analyst presentations, but we were short since August last year, and we've closed our short Monday and Tuesday this week, and we did quite well out of that. But we do think that with the 40% drop we've seen in a very short space of time since the trading update, that is sufficient of an adjustment for now as we read the credit market at the moment.
All right, Paul?
So, are we talking about valuations now?
Yes, we are. We're talking about funding first and then valuation.
Okay. Now, look, African Bank has made significant strides with regard to its funding book. They've raised nearly 60 billion rand or something, outstanding amounts. It's a series of locally placed institutional offerings in the corporate credit market. They've gone international in recent years. They've gone to Switzerland and to Singapore and all sorts of places. They've issued a lot of inflation-linked bonds as well as bonds where they're allowed to float and then they back it up. So there's a lot of South African institutions that have got the paper but have been very happy. I mean, the fact is that they're under pressure now, so I suppose they may step off that a little bit, but their capital buffers are very substantial and very, satisfactory under the
But I mean, you must have had a lot of your clients phoning and saying, listen, but what will he do with Able? What are you going to do with
Stock,
Able?
yes, but remember, we are talking about the stock here, but as far as their funding is concerned, I don't know, I suppose there are some people who've been trading the secondary bonds out there, but they don't normally trade that much. It's mostly placed with people who intend to hold them to maturity.
So the funding is secure. There's no issue around the funding, in your opinion?
In my opinion, anyway, maybe JP.
JP, is there an issue around the funding?
So if you look at the spreads on these bonds, as Paul correctly say, they don't trade in very liquid markets, but they have blown out a bit. They have increased, which means the prices have dropped, which means credit investors, bondholders are saying these are more risky now, there's more credit risk. The good thing about African Bank is they know they're taking a lot of risk with lending. So they don't want to take a lot of risk on the funding side. So they are relatively long funded. They can go as much as a year without issuing any bonds, and they should still be okay. Their capital adequacy ratio is at around 28%, versus Capitec, by the way, of around 40%. So once again, Capitec much more secure. But even at 28%, you can probably go a year, and your capital adequacy ratio would still be at above 20%, even if you redeem the bonds that come up for redemption. So we do think it will be tough in the next year for them to issue bonds at a reasonable yield. The yields that debt investors will demand from them will be higher, and we've seen that in the spreads. And the fact that they are being funded by the wholesale market, by bonds, mean it is more risky versus Capitec, which is funded by deposits to a large extent, which are a lot more sticky.
Let's get your thoughts on Capitec, and of course they have done a rights issue to fund their expansion.
Yeah, they've done a number of rights issues as they've gone along, but I think that's because they started off with such a small capital base that they needed to grow that quite quickly. They have also got a corporate market issuance program going, but their deposit base, as JP says, is fantastic because that is in aggregate sticky. I mean, people have their salaries coming and going, but the aggregate 30 billion rands worth of interest-bearing, but very low interest-bearing deposits is just marvelous.
So funding, who's ahead? JP?
Capitec, for sure.
Clearly, and Paul,
I'd say African Bank because of that global program, which gives them real reach out there and lots of funding sources.
We're going